Morning. It is April 21st. Just wanted to give a little market update, let you guys see what's going on today. It's kind of some interesting stuff. So we'll right out of the gate, buyers, you've got some competition. We've already had some multiple offer situations where you've got to be pretty competitive to win the bid. We've got some buyers that have lost a couple already. And the listings are getting a lot of activity, and you're pretty likely to find some buyers pretty quickly. It doesn't mean that your house that needs everything to be repaired is going to sell in a minute, but it does mean that you've got a little bit of wiggle room. So let's take a look at these stats. So we've got active listings continuing to draw down. Let's see, last time I made a video like this, it was 13,471. Now we're down to 12,500, right? So within a little less than a month, we've lost about 1,000 active listings, right? That's our inventory. Next, what was last month? 8,593. That was the number of homes under contract last time we talked about it. And then boink, that jumped back up to 9,084. So that's buyers coming back and saying, you know what, we're done waiting. We're going to go get something under contract. Here we've got new listings by month. Okay, so here's how you read this. We got 21, 22, and 23, just to see a comparison of how many new listings were coming onto the market during these months, right? So 2021, 8,600, 8,600. This year we had 7,500. February we had 8,800, 8,700. This year we had 7,300. March, 10,005, 10,004. We came up a little bit short at 7,800. So April looks like it's doing pretty poorly as far as new listings coming to the market, simply because we are 2/3 of the way in. So, if we're being generous, then let's call that 4,000. Let's expect 6,000 new listings to the market. That's not great when we were tracking at 7,500, 7,300, and then 7,800. We should see a spike in March. Traditionally, you see doing okay. And then we throw our listings on March and April, and then we start to drop down. So if you're not out there selling, then you've got fewer homes to pick from. It's getting a little scarce. What does that do to pricing? Well, let's look at the 3-month moving average of the sales price. So this is starting back in 2021. We said, okay, let's buy a bunch of houses. Let's everybody buy a house at the same time for 3% interest rates. So that climbed and climbed and climbed. That forced those purchase prices up. So along with that came the price per square foot. We kind of peaked in June. You've got lagging indicators. These June houses went under contract in April and May, and then finally closed, and then it started falling. So April, May is when your contract prices actually started to chip away. They started to reduce. You were getting a little bit tougher negotiations. Things were staying on market a little bit longer. That takes a couple months to show up on these closed price per square foot. So we rode that down until, realistically, it kind of ended in November, December. That's when things turned around, and then you can see that 2-month lag, right? You got December, January, February. You've got that price per square foot is still going down because those are finally closing, and now you're on that upward trajectory. So this is kind of the path that we're on right now. It's going up. You want to take a look at the 3-month average over since 2011. This was the roller coaster that we typically rode. So we were in recovery mode after a pretty gnarly crash in 2007 and 8. But it was stable, right? And then all of a sudden, pandemic hit, and then whoop, there we go. So now we kind of just we're trying to do our best guess. Where does this go next? Does it flatten out? Does it continue to correct a little bit? Kind of doubt it. Don't quote me. Although if that is what happens, you can't quote me because I'll be right. Let's look at the crash. What does that look like on a graph? This was 2004, 2005. People said, let's buy a bunch of houses in Phoenix and rent them. And then they said, uh-oh, there are not as many renters as we thought. Now we're holding the bag. Let's sell them. And then everybody said it at the same time. And then everybody started losing their loans and foreclosing. And boom, now you have this massive inventory increase, not enough demand. And then we've been in recovery mode since then, right? Then we said, hey, let's get some really cheap money. 3%, you want to buy a house? Boom. There go the purchase prices. So, I mean, it's an interesting one out there. It looks like through the summer we're going to have a little bit more competition for buyers than we typically did. Summer's usually our slower time of the year, but I feel like this summer is going to have quite a bit of sales activity and quite a bit of competition. Let's see if I can find real quick Cromford Market Index, all areas and types. Let's just take a peek at it. Where'd it go? Let's do a weekly. What does that look like? So this is your forward looking good, looking good, looking good. It's kind of chilling out. That's probably good. If we just ride like between 120 and 140, I'm good with that. I don't want all this nonsense up here. It's annoying. I don't want that. We want this. We want stability. Stability makes it easier for everyone to predict how things are going to go. As soon as you have these wacky lines, and we're chasing stuff all over the place. So let's see what next month looks like. You'll be hearing from us again.